Good day, fellow investors. I recently got an email from John saying how he's selling his business for $500,000 and he wants to focus on investing so that in 20 years that becomes 2 million. And this got me thinking, what is the most important thing when it comes to investing? Is it turning $500,000 into 2 million or something else? Because if you start looking at how to quadruple your money, you might very quickly go into the slippery slope of great growth projections. So I just was reminded by these comments. Sven was right again on very good food stock that really went down the drain recently. I also discussed ARK stocks, especially 2 years ago. I think this was in February at the peak of ARK. And I also analyzed their stocks and I said the following. And many of these stocks are going to go down like this. Also discussed other companies like TTCF, short selling. Of course, Tesla goes boom, but others go bust. So that's the risk there, but I'm also not immune to that. And I'll put the link in the description below. Check my 15 mistakes that I made over the last 5 years. I still made 15%, but clearly something that I have to avoid in the future. Now, what I really want to discuss here is the 2 million must not be the focus. The focus must be on protecting the 500K first. And that should be the first message when it comes to investing. This is not easy. As I said, I haven't been immune to growing, buying great risk and reward. We have to focus on risk first. And that's also why I make this video. And let me explain how important this is not to lose money. As Warren says, never lose money, rule number 1 of investing. Rule number 2, never forget rule number 1. So let's start with an initial investment of 500,000, no monthly contributions. Let's say you do it for 20 years, you make 7.2%, and you are out exactly at 2 million. But you must never lose your money. If you lose your money, let's say year 10, you lose 30%. So you are at 1 million at year 10, you lose 30%, you are then down to 700,000, and then you invest for the next 10 years, all well, you get out to 1.4 million. This is actually 21 years, but okay. 1.4 million is 600,000 less than without the loss. So by just losing 30% in 1 year out of the 20, you lose 30% of your total wealth down the road. That is huge, and that is why this is so important. Warren Buffett says it often, but I think we as people don't take it seriously enough. Because we are naturally wired to look for those growth opportunities. How can I grow? Where this will investment lead my money? But the first question to ask is, how much can I lose with this? And this leads to something, again, not sexy, not entertainment. Investing is a boring process of elimination. Not, oh, look where I can put my money. You eliminate everything till you find something that is in your sweet spot. Another research platform member asked, Sven, is there an opportunity on Credit Suisse? And I simply asked, I don't know, I'm not a specialist in banks, and as you can see, for a good reason. No idea whether there is an opportunity or not. Made a video on banks a while ago, how those are that cheap, and I'm not investing. That was a good call. But the essence of value investing is watching risk first, eliminating anything that is wrong there. As we said, losing 30% in 1 year out of the 20. Let's say year 10 loses you 30% down the road. So from 2 million, you end up with 1.4 million. And that is a huge downturn for your wealth. Now, let me be very precise here. This doesn't mean stock prices don't go down. So let's start with the Berkshire performance, minus 48.7 in 1974, minus 23 in 1990, minus 20% in 1999, and minus 31 in 2008. So that doesn't mean stocks don't go down. Every 12 years from peak to bottom, Berkshire crashes 50%. That's a given. It means avoiding permanent capital loss. Charlie and I had an extreme aversion to permanent loss of capital. That is the basis of their success. What does it mean, permanent loss of capital? If you look at the S&P 500 now, at 4,000 points, you have to ask yourself, okay, what can go right? What can go wrong? And then you look at the earnings, okay, let's say 200, P ratio of 20 to round things up a little bit. P ratio of 20, and then you say, okay, if things go wrong, the P ratio here, 2009, let me go back here, 2009 earnings around 100 in a good economy went quickly back to what they were. So the P ratio here was over the long term earnings power of 7. You are now paying 20. If that happens, again, if we see a 7 again, this goes down to 1,500 or something. Even less, 1,200, which is crazy, but 50% drops are not uncommon. And what happens then? You need to know your investment and you need to know yourself. Will you panic when things will go south? Because things will go south sooner or later. If we just look at over the last 200 years, 17, 23, 25 times has the stock market in a year went down from minus 10 to minus 50%. From top to bottom, let's say every 10 years, the stock market crashes 30%. That's a given. Can you handle this? Because there are also positives. If you look at the minuses and negatives, this is the positive. So these are the lost years. All of these are positives. But you need to survive the losses to understand investing. You need to know, okay, at what price am I buying? If it goes down 30-50%, am I simply buying more? If yes, then you are an investment. So you have to keep in mind that permanent loss of capital depends on price paid and what you bought. Keep in mind that the economy can change, interest rates can change, your income can change, anything can happen. And that's the environment you have to think about when it comes to investing. How are you ready for anything happening? And we see with the banks and everything going on, what's going on, 99% aren't ready. Not even Credit Suisse was ready because it's easy to gamble with other people's money. You cannot gamble with your own money. Avoid long-term permanent capital loss, and everything else will fall into its place over time. Thanks for watching. Check my other educational videos. I've made 2 and I'll put them into the playlist or in the link in the description below. And I'll see you in the next video.